You are listening to Mobile Payments Today podcast. Elan Advisory Services partners with banks and credit unions to provide credit card, merchant, and mortgage solutions. Visit elanadvisoryservices.com to learn more about a partnership and access free white papers on frictionless payments, millennials, and digital transformation. That's ELAN advisoryservices.com.
I want to welcome you back to the monthly Mobile Payments Today podcast. This is David Jones from Mobile Payments Today, and we've got a very interesting discussion in store for you today. With the rise of the gig economy, millions of Americans are operating as full-time freelancers, gig workers, or solo entrepreneurs. Their banking needs are somewhat unique from the standpoint that they have unstable income in many cases, and spend much of their time chasing payments from corporate vendors, publishers, and other clients. Many experts would argue that the traditional banking system isn't necessarily set up to serve the needs of these type of workers in a cost-effective way. Looking at these issues, we thought it would be a perfect time to sit down with Lamine Zarrad, co-founder and CEO of Joust, which is a new banking platform that is focused on the gig economy.
Elan Advisory Services partners with banks and credit unions to provide credit card, merchant, and mortgage solutions. Visit elanadvisoryservices.com to learn more about a partnership and access free white papers on frictionless payments, millennials, and digital transformation. That's ELAN advisoryservices.com.
We're here with Lamine Zarrad, co-founder and CEO of Joust. Lamine, thank you again for taking the time to talk with us.
My pleasure. Thank you for having me, David.
We've written a bit about the company in recent weeks, and you've gotten a lot of coverage lately, some of the new initiatives that you announced in January. Why don't you kind of give us a bit of an overview as to what Joust is about in terms of expanding banking alternatives for freelancers and other customers and small businesses that need banking services and aren't served by traditional lenders?
Yeah, absolutely. I think our focal feature as a mobile bank platform for freelancers, entrepreneurs, really anyone engaging in a commercial activity as an independent entity, is not necessarily the bank account, right? Not the deposit account. Although we offer a business bank account that's FDIC insured, we also offer merchant processing that's fully integrated into that business account. So it's an incredibly convenient configuration when it comes to the application itself. But really, the most important feature is an ability to unlock liquidity associated with receivables. A lot of small businesses are struggling with capital. Working capital is very difficult to obtain. And because the cash flows are non-recurring, sometimes seasonal, certainly non-traditional, and because the personal credit profiles are not always up to par with what traditional banks consider, a credit profile worthy of a line of credit, small businesses struggle. And what we recognize that there's an interesting way to give them access to capital without really evaluating their own personal credit profile, because entrepreneurs are frequently over leveraged. They put their heart and soul into their business, and sometimes max out their credit cards just to get things going. However, entrepreneurs have access to assets. Those assets are usually receivables associated with services or products that they sell, and sometimes it takes them several quarters to get access to those assets, basically, because a lot of companies pay late, and sometimes by design. They pay, to manage a float or something like that. And we thought if we can unlock the liquidity associated with that's going to be a game changer for a small business. And we don't have to look at their profile, although we do, but we really focus on the profile of the payer. And a lot of small businesses and entrepreneurs, especially freelancers, work for larger corporations that are very creditworthy. They just happen to, maintain that extended float that we unlock for small businesses. I hope that makes sense.
For freelancers and other clients that participate in Joust, by looking at the creditworthiness of the companies they work for.
Correct. So if you send an invoice using Joust, well, first of all, you sign up for Joust, and under 3 minutes, you get a bank account. Within that time frame, you also get a merchant account, so you can accept credit cards, right? So, it sounds like a no-brainer for most people that, credit card processing and bank accounts go hand in hand, but no one else does that. You don't have to go get Stripe. You don't have to go get PayPal. You can just use Joust to accept payments. And you can send an invoice. And so when that invoice is sent to any of your payers, or rather right before you send it, you have two options. You can instantly fund that invoice. For 6%. So it's incredibly, I would say, economical, accessing the funds associated with that invoice. Or you can guarantee payment within 30 days in an invoice. So effectively, if your customer is going to pay you in 90 days for 1%, you can guarantee that on the 30th day you get paid. If they don't pay you, we pay you. And so, like I said, alternatively, you can access the liquidity for 6% instantly.
Before Joust was, making this type of service available, how were a lot of freelancers and other small businesses managing their funds? I mean, what were they doing to keep their cash flow?
Yeah, Upwork and Freelancers Union has a very detailed study, and what happened historically is that freelancers, if they didn't get paid or got paid severely late, they took a serious financial hit. A lot of them would lose, their homes because they couldn't make their mortgages, lose personal possessions. A lot of them would turn to alternative lenders or pawn shops, max out credit cards, borrow from friends and family. And so those were the only alternatives for someone to get out there and somehow create some sort of a balance out their cash flows to survive until next job. And so that's been historically the way that freelancers financed their businesses until they got ramped up and had enough customers and clients where the cash flow stabilized a little bit. But even folks on our platform with 50 plus clients still experiencing that roller coaster of ups and downs when it comes to payment. And so that's why we feel that our service is invaluable.
Gig economy, you have a lot of people that work for different types of companies that are essentially 1099. Are you finding an audience in those areas that are, not the traditional freelancer, but a gig worker? Are they finding, some benefit from Joust?
Yeah, Joust is designed for a small business or gig economy worker or freelancer who manages their own customers, right? Your book of business, people you actually invoice and that pay you. We're not designed for someone who drives for Uber or Lyft, at least not now. However, we do recognize that those individuals typically, if you're a driver for Uber or if you deliver for DoorDash or really anyone else, you're probably hustling on the side and you have a number of different other gigs and sometimes you are managing customers. So we feel that even if you drive for Uber, you can still download Joust and still get that bank account. You can put your direct deposit or rather associated with that bank account directly into Joust, and then you can manage your customers on the side with the invoicing feature. That said, we are thinking in the near future to transition to more traditional lines of credit once we start building profiles and developing models that can recognize the risk of non-payment and recognize creditworthiness not based on your FICO score. And so the goal is to extend small lines of credit to individuals, for instance, for car maintenance purposes and so forth. The biggest complaint, we're getting from platform workers such as drivers is that, this is great. I don't mind doing this. It's giving me freedom, but occasionally I need to maintain my vehicle or have enough money for repairs, and I'm constantly finding myself going to high interest credit cards in order to access a little bit of capital. And so we feel that because we can associate their profile with cash flows and even tie repayment to payment from those platforms, we can eliminate a lot of that risk. And so as a consequence, offer lines of credit that I would say ethical, right? They don't gouge them in terms of interest.
How big an opportunity from the freelance standpoint? I mean, how many freelancers are out there that are potential clients of yours?
Sure, it depends on who's counting, but the Bureau of Labor and Statistics issued a report, and it was something along the line of 30% of the U.S. workforce, nearly 55 million individuals consider themselves independent workers, including freelancers, contractors, and so forth.
Yeah.
And then there's 28 million small businesses in the U.S. These are more traditional SMBs. but they face very similar challenges.
When you have a base like this, they're not as stable as someone who maybe, has been working for a major corporation for 20 years and gets a regular check, has, some savings put aside. How do you manage that risk?
Yeah, that's an excellent question. So traditional bank, if you think about the structure of a traditional financial institution, depository financial institution, is designed around deposit accounts, right? Banks take in your deposits, which gives them an ability to then lend those deposits and make money, right? That is fundamentally the function of a bank. And, banks do other things on the side here and there. And when we were thinking about the modern workforce, that's, to your point, doesn't have the security of being in a corporate position for 30 plus years with a savings account that keeps growing with every paycheck, with retirement accounts that keep growing with every paycheck. There's a lot of uncertainty and a lot of non-recurring activities that are happening. We thought that the concept of a deposit account to make money just doesn't make sense to us, because a freelancer can have $10,000 in that account one day and then zero for a few weeks after that. Okay. And so the way we make money, it's not necessarily on deposits, although there's we make money on interest that banks pay us for bringing that liquidity to them, because we kind of sit on top of a financial institution. Our true source is payments. And so when invoices are processed, we charge an industry standard of 2.9%, just like any other payment processor, and we make somewhere in a ballpark of 92 basis points per transaction. So it's a healthy margin, and for us, it's the volume. We don't care if it's recurring or non-recurring or seasonal. We care about how much you process. And quite frankly, there are a lot of gig workers that make six figures. They may make those six figures in 8 months out of the year, and then have no income the rest of the time. And for us, we recognize that in those 8 months, they will make six figures. We obviously are profitable in that time, and then we can help them to get through the sort of a dry spell.
They have to pay estimated taxes. They have to, keep the lights on. They have to chase people for money.
Yeah, so a freelancer, if you think about it, is a micro business, right? They're an individual and a business, and a lot of times those lines are very blurred. This is where I think banks get lost, because you can't put them in either category. And so for someone who's a person who also operates as a business, that's how they make money. They have a number of challenges. First, a lot of times they don't segregate their funds, and that creates issues for them. If you're using a personal account to do all of your business, and if you lose track of your bookkeeping, and quite frequently people do, just because it's an additional kind of a cost center to you and a time suck. Tax liability becomes an issue if you're not keeping track of your taxes. So managing sub accounts, for instance, allocating funds for various different projects, it requires extra mental effort and focus and discipline to organize your finances and keep them all nicely sort of stacked. And so we thought, when we created a bank account, we thought we can build those tools into the bank account to help them. They don't have to get out there and get some third-party tool and layer it over their bank account. So with our application, they can allocate whatever percentage they want toward taxes, and it will sit there in a separate account where they can access it at any time. So it's not inaccessible to them, but they can say, every invoice that comes in, I'm going to allocate 10% of that for tax liability. Or they can create another goal. They can create an unlimited number of goals, which are just sub accounts. For instance, for hardware, like if you're a photographer, you need a camera. You can say, look, the camera costs me $2,000, and Joust automatically will establish that goal for you and allocate a certain percentage, round it up monthly into that account. So a number of tools to kind of help them work through it. We also integrate with bookkeeping platforms. So if you're using QBO or Xero or really any other bookkeeping software, you can integrate Joust into that platform and manage all of your finances and activities in that account. And that helps you to segregate your personal income from your business income. Another service that we haven't mentioned that typically banks don't offer is incorporation. We recognize that a lot of people are operating as sole proprietors, using the social security numbers to do business, and really keeping themselves open to all kinds of liability. And we live in a country that's litigious in many different ways, and so you want to really protect yourself from liability by taking advantage of laws that have already established to help corporations separate liability from their the leadership. And so we help freelancers incorporate as LLCs, for instance. and then set them up as LLCs and help them segregate their funds and manage their business separate from from their personal affairs. So effectively simplifying their lives through an application, which is, think about it, is incredibly streamlined.
Do you offer things like automatic bill payment for Joust members?
Yeah, we have over 55,000 billers that you can set up in your system. And if you download our app today, you can just you can search in a search bar, and we have the most obscure ones. We were just testing to make sure that we have a wide coverage. If you can't find your biller, all you have to do is submit your request to us, and we usually would pre-populate it within 30 days or so. We can identify that biller. And so, yes, you can set it up automatically. There's a way to manage all of those bills. We have a nice, easy to use dashboard that shows you what's pending, what's due, how much do you have in your bank account, and really help you maintain that liability. In the future, what we're going to build is a way to cover potential non-sufficient funds. So if you have X amount in outstanding bills, but only have, let's say you have zero in your bank account, for this example, we'll help you cover those bills with lines of credit. It's not available in the current state and in our minimum viable product state since we launched, but that's one of the features that's on our roadmap to help users really manage their financial affairs.
You're going to be offering some expense management and bookkeeping tools as well. Is that something that's on the horizon?
So bookkeeping tools, no. We don't want to compete with QBO. There are a lot of great tools out there, and those tools have been developed over decades. What we're offering is full integration with those solutions. So we're not hoping to replace expense management or bookkeeping for you, but we'll integrate and help you streamline that experience within Joust.
How did you personally kind of get into this?
On so many different levels, this is incredibly personal for me. I'm an immigrant. I came to the U.S. from former USSR, and my family was displaced because of the ethnic conflict. We spent 6 years as refugees, completely undocumented in Moscow with no identification. We couldn't qualify for banking. So and many other services, and we were quote unquote unbanked, and it left an impression on me how important it is to be able to access financial services on your well-being, financial well-being as an individual, as a family, as a group. And so that's always been kind of in the back of my mind as I progressed career-wise. When we came to the States, I joined the military and the intelligence community, kind of progressed through the ranks there, and then worked for financial institutions, worked for Merrill Lynch, worked for Tudor Pickering Holt, worked for USAA, and I always kind of observed the processes that were designed in a way that they were not inclusive, right? They were designed to exclude groups of people who presented a certain amount of risk, and I always thought that those processes were outdated and did not look at appropriate factors to help people, acquire tools that they really need. So I became a federal bank regulator because I felt passionate about helping consumers not just acquire banking but be treated fairly. And that was an amazing experience. It gave me a vantage point into the entire institution and identified its strengths and its weaknesses. And so I, having spent a couple of years doing that, I decided that I can build a software product that could help financial institutions be more inclusive. And we started with a product that we launched in cannabis industry, actually, out of all the spaces, because it was, that industry is an exploding opportunity for a lot of entrepreneurs, but who couldn't qualify for banking services. We'll build a tool to shed light into their profiles to help banks manage anti-money laundering risk, counterterrorism risk. And then we realized that what we build is so much bigger than one industry. We build something for merchants, for small businesses, to access banking. And when we came to that realization and recognized that there are 85 million Americans who could qualify for services using something that we've developed, we decided to build an entire ecosystem of banking tools ourselves instead of providing our product as SaaS to other banks who may or may not use it. And so that's the progression, and that's why we do what we do.
What was the process like from a regulatory standpoint? Because you're in an environment where it's a bit of the Wild West. You're not like in a regular banking space. So how do you decide how you're going to go about finding a partner to work with and getting through regulatory hurdles and working in different locations? What's that like?
Sure. I mean, U.S. has a stringent regulatory environment, to put it lightly. And for various reasons, I think it's probably best. If a financial technology company, fintech, wants to get into banking, it really can't do banking in the U.S. as an independent entity, and you have to get a charter. And so you have to work with a financial institution. You have to work with a brick and mortar bank. And for us, it was incredibly important to find right partners. We work with NBKC, a community bank out of Kansas City that's incredibly innovative. That's the only community bank in the United States that has its own technology accelerator, and it's focusing on inclusion, and it's focusing on developing and delivering products to the community that they can bring in more people into the fold. And so when we discovered them, we realized that philosophically and mission-wise we were aligned, but we knew that we needed to build a system that provides access to other banks similar to NBKC, and gives us an opportunity to grow. Because if we grow fast enough, we didn't want to impact their regulatory ratios, for instance, capital and so forth. So we partnered up with a platform called Q2. Q2 provides core processing services to financial institutions. They developed a product with another platform called Stone Castle, and the product is called Camber, which gives us access to 900 different small community banks that are serving their respective communities. And so to us, it was an amazing opportunity to become a bank with a national reach without really having to become a bank and have to be subjected to regulations. Although, by extension, because we represent a partner that's a financial institution, we're subject to every single regulatory constraint they are. But by working in partnership with them, we let them sort of maintain that regulatory burden, maintain the compliance burden, and we do the sort of front-end acquisition, user experience management, and then we're able to innovate because we have the resources that we can dedicate to unique products, like looking at alternative data and so forth, something the banks wouldn't have the time, resources, or focus to execute properly on it. I hope that makes sense.
This network that you work with, does that allow, like, let's say if I'm a customer of Joust, can I use one of these other community banks to, go in and withdraw funds or get services, or how does that work?
Yeah, so those banks, despite the fact that they back us, are independent. So if you're a Joust customer, Joust handles all of your needs in terms of deposit and taking funds out and so forth. You can certainly go into those banks and open a separate account that's going to be represented by them, and they'll manage your customer service. But at the moment, Joust is for your purposes as an end user, Joust is your bank, right? And you never interact with our back end partners. Although you would know that your funds are stored not at Wells Fargo, not at Bank of America, not at Chase, but rather the small community bank that's able to then lend to members of its community, to revitalize financial deserts and to help marginalized groups and various different communities. So that's sort of a philosophical understanding that users have, but there's no access to those banks at the moment. Eventually, we would like to open it up, make it a little more free, where you could, in fact, if you have cash, you can walk into a branch of one of those banks and deposit it, and they'll put it into a Joust account. But at the moment, the experience is 100% digital for our users.
Is there any plan for Joust to eventually open some kind of a brick and mortar space? Was there a need for that, or are customers asking for something like that?
Customers are not asking for it, and I think preferences are changing. If you look at data, most of our customers in the demographic group that we serve, and usually they're age-related, haven't stepped into a branch in past 5 years and have absolutely no plans in stepping into a branch. That said, we recognize something unique. Branches serve a purpose, right? I don't think branch is going to completely go away. I'm not one of those fintech founders who thinks that the world is going to be 100% digital. We're still humans. We still, crave human interaction, especially when it comes to really complex problems that are very difficult to solve remotely.
Yeah.
And those problems they're difficult to solve not because of the technical component of the problem, but rather the frustration of something that's not moving fast. And folks want that face-to-face interaction. They want to thank someone, or they want to yell at someone. And so what we're planning on doing, not just partnering with banks, but partnering with other gig economy platforms that have brick and mortar presence, like co-working spaces.
Right.
where we can embed ourselves and partner with them. So if you're a member of that co-working space, you can walk up to a manager who's properly trained by Joust to engage in basic type of conflict resolution and dealing with issues that require someone actually sitting down with you and talking to you. But everything else is going to be digitized and virtual.
Now, if somebody has a customer service issue, is there a way to contact Joust and interact with a person, or do you have like some kind of an AI-based system where you do customer service that way, that's automated, or how do you do customer service?
Yeah, we have a two-tiered system at the moment. So the first line of defense is AI. We have a chatbot, so you can ask questions, and a lot of the questions that are being asked are very simple, like, hey, where do I find my routing number is one of the most commonly asked questions, and it's easy to find in the application, but sometimes people just want to ask, and so AI and chatbots are fantastic for that, and what happens is that every time a question is asked or that's not answered properly, it's passed on to a human. A human picks up that thread and interacts with the customer and resolves the issue.
Where do you see the banking industry going in the next few years? I mean, in terms of the overall environment, where you have so many millions of people that can't get the type of services that they need through traditional banks. A lot of these newer banks, these neobanks, are coming online. Where do you see that going?
In terms of banking services in general and neobanks, and what impact do you think, what I think rather, is going to have on an industry in general? I think, here's how I think. I don't think neobanks are going to change the way banking is done. I think neobanks are going to create pools of access, right? Kind of like us. We have very specialized view and very specialized service for a group of individuals. So that is to say that banking is going to become vertical. I see traditional banks staying here and they're not going anywhere. Your Chases and Wells, but more and more traditional banks are going to become service providers to financial technology companies. They're going to become your AWS or your Azure platforms, right, on which you can build technologies to extend services to certain subgroups. So that way you can surgically focus or address issues of a specialized niche. And you can say that I want to be a bank for doctors because doctors have a unique need, and just traditional banking simply does not addressing that need. And then you can go to a number of institutions and build your platform based on their infrastructure, and then design your product around that specific group. And that's what I see in terms of the future. So I think the incumbents are here to stay. They recognize that as an opportunity. I think they're giving up their brand easier these days, and they would much rather bring liquidity into their institutions than put their brand front and center and let a fintech company come in and manage their customer much better than they can ever do.
Really want to thank you for taking the time out to talk to us, and we will following up on your activities, and feel free to reach out to us if you have any additional developments.
Yeah, my pleasure. Thank you so much.
I want to thank everyone for tuning in to listen to this discussion with Lamine Zarrad of Joust. This is David Jones from Mobile Payments Today. Thank you for tuning in, and look forward to talking to you again next month. Thank you.